Hey guys, somebody asked me, they're taking a test in a couple weeks, and they asked me if I could do some suitability stuff. It's hard to do. I will try to do what I can for the next 15, 20 minutes or maybe less, depending how tired I am. It is 10 p.m. and I've been working all day. So a couple things about suitability. And again, there's no script here. So I'm kind of just riffing and trying to figure it out. First of all, if you like what I'm doing, please subscribe. Please hit the buttons, tell people. The other part is if you go on my description, there's actually a pretty good achievable thing. Achievable is it's pretty cheap. I mean, it's like 60, 70 bucks and it's more questions. And actually, I think they do a free, what do you call it? They do a free trial if you want to give it a shot. Try it. I mean, it can't hurt to try it. And if it can help you, that's great. And let's see what happens from there. Okay. So a couple of things about suitability that I'm going to talk about. Time horizon is a lot. And again, if this is going to be all over the place, because I'm just throwing it out there because I want to help people before my live. So time horizon is everything. So the longer the time horizon, the more risk we can take. So we want to take more risk with long. So if you're thinking 15, 20, 30 years, there's a lot of risk there and you have a lot of time. So there's a lot of purchasing power risk, which is inflation risk. So bonds over a long haul are not the greatest thing in the world. So I wouldn't go too heavy on the long stuff unless they say I want safety. If you think the question is referring to inflation and it wants to protect against inflation, you really want to put common stock in there, any kind of equity, whether it's a variable annuity, a mutual fund, anything like that. Mutual funds, ETFs, variable annuities, anything with stock, convertible bonds, convertible preferreds, anything that turns into common stock or is common stock is great for inflation. It's the best inflation fighting tool there is. Okay. If you hear them say safety of principal or protection of principal, boom, treasuries, governments, every time. Safety of principal means I don't want to take risk. So that's always going to be a treasury or something like that. But on the test, they're going to give you two things. I want safety, I want income, I want this. It's usually going to be two things they give you. Like if they say they're living on Social Security and a small pension, then they're not rich. So they're not doing munis. You have to kind of look for things like that. So if they have a lot of money, then you're thinking tax breaks. If you're thinking if it's not a lot of money, then maybe you're staying away from munis, more income. The older they are, the more bonds you want to do. Everyone goes this, 100 minus their age and whatever. I just do this. Their bonds, their age and bonds. So I'm 50, I should be 50% bonds. That's your base. Then you adjust up or down based on tolerance. If they want to take more risk, maybe do 40% equity. 40% debt and more equity and other stuff. I kind of look, when I see something, I look for debt first. I look, if they do the percentage things, I look for how much debt they have. So I try to look for that. So if I see like, oh, they're, like a 30-year-old and I see 60% debt, I throw that right out. Yeah, I'm fighting with my daughter left and right because she works for a hedge fund and they're very doom and gloom. So she's always treasuries and money markets. And I finally got her to put a little more risk in because she's 29. She's got to put some risk. She has a long time horizon, I hope. So now, again, short term, well, we'll get to that. Long term, you got to take some risk. You have inflation problems. So you really need to do equity and equity type of things. If they give you safety and then inflation, then yeah, then we can go tips. But tips don't beat inflation. They kind of just match it. So tips don't beat inflation. Common stock does. The best inflation fighting tool is common stock. Okay, again, safety principle, bonds. The older I get, the more bonds I do, the more fixed income. Maybe munis if they have a lot of money. So I say this, and it's probably politically incorrect. Rich people buy munis, poor people buy corporates. Just think that way. Okay, Social Security, social worker, not making a lot of money, one of the artsy jobs, maybe a teacher. They're probably not have a lot of money, so you're going to go safer, and you're not worrying about munis as much. If you see a retirement account, guess what? You don't put in it. You don't put freaking munis or limited partnerships in there because you're already tax advantaged. Why would you put a tax advantaged product in a tax deferred account? It just doesn't make sense. So again, let's come back now that I'm riffing and going crazy on this. So yeah, I say riffing a lot just because it's the only way to explain how I'm just going off the handle. Now, Long-term equity, short-term bonds. Like, so say you have a time horizon of less than 5 years. You're going to go bonds. You're going to go fixed income. You can't take the market risk. Yes, that's FINRA world, not real world. The other thing is under a year, no freaking equity at all. If you see a year saving for his house in a year and a half, it's money markets, commercial paper, bankers acceptance, stuff like that. It is all about the safety and not making money. Remember though, for safety, it's going to be lack of, there's not going to be a lot of money. Okay. So let's think about this. So if I want, let's go through a couple of things. So if I hear speculation, I'm going to look for growth stocks, speculative, small cap, tech stocks, stuff like that. Maybe high yield or low rated bonds, same thing. Maybe I'll invest in precious metals or commodities, maybe even futures. And then maybe like same thing, use those words with mutual funds. So if you're talking about the Series 6, use the same thing, a small cap fund, a tech fund, just use the word fund instead of it. Limited partnerships are also speculative. They're not for the weak of heart. And you have to make sure that they know that they can lose their money. That's 2. Now, what if I want growth? It's not, I don't really want speculation because speculation is rolling the dice. Growth is a little safer. Maybe on growth stocks, maybe mid to small cap stocks, some options. Maybe not the highest level, but maybe investment grade, but lower investment grade bonds. Limited partnerships based on growth. Maybe you want some growth stock mutual funds. See, speculation and growth is a little bit. So maybe if I want growth and maybe a growth and income fund or something like that. Commodity funds and variable annuities. Again, growth and speculation are sort of same thing. Speculation is more risky. Okay. What if I want safety? I'm a wimp. Cash, money markets, CDs, treasuries, basically high-end muni bonds, blue chips. Remember, blue chips are safe. Blue chip stocks are safe, so they're kind of good. They beat inflation and they're safe. Okay, so now, again, preservation of capital. If you hear principal protection, safety, government, securities, Ginnie Mae's maybe, but that's after you look at the treasuries. Growth, common stock or common stock funds. If I want balance or moderate growth, I'm thinking blue chips, aggressive growth, tech stocks, sector funds. Sector funds are like basically my dog. I'm playing catch with them. Sector funds are more like they're not diversified, so they have more risk because they have a lot more non-systemic risk because they're based on one thing. If I want income, so if they say income, mostly bonds and preferreds and stuff like that. Hear the dog coughing. Bonds and preferreds, not zero coupons. Zero coupons and ETNs and ELNs don't pay income. Zero coupons, so commercial paper doesn't really pay income. T-bills don't pay. Zero coupons, strips don't pay. ETNs, ELNs don't pay. You get the money at the end. Rich, muni bonds and muni bond funds. If I want some high income, I'm going to do like lower rated bonds, high yield bonds, stuff like that. Liquidity. Remember, the other thing is when you hear liquidity, they went in and out. So it's like blue chips are liquid. Common stock is liquid. Short-term securities. Now, when I say common stock, I mean exchange traded or high grade. So not over the counter, not pink sheet, stuff like that. You want to make sure that you're paying attention to what they want. Okay. So now, if I hear liquidity, I'm doing money market funds, anything money market, short term, highly rated, stuff like that. Okay. Inflation, common stock. Limited partnerships, real estate, annuities are not liquid. Remember that. Limited partnerships, DPPs, real estate, and annuities are not liquid. Munis are not even really that liquid. That's why they say, should you short a muni? Well, you can, but you shouldn't because you can't get out of it. So let's make sure we got this. Safety, treasuries. Growth, common stock. Income, bonds, they have to pay. Now, income bonds are no good. Income bonds are never suitable for anyone ever. It's like what they are. They're basically a company that was going into bankruptcy and it needs a little room. So they create these income bonds that they only pay the coupon when they have income. And remember, it just got out of bankruptcy, so it's probably not that strong. I'm sorry for being all over the place, but that's just the way I think. So again, long-term, probably common stock. Short-term, money markets. Income, bonds. Safety and income, treasuries. Rich and income, munis. Poor and income, corporates. Do you see there's a pattern here? They're always going to give you one or two things. You have to look at everything. Like, okay, interest rate risk. Interest rate risk is a risk that rates are going to move. So what do? We look Long-term bonds have more interest rate risk and low coupons. So if we're worried about interest rate risk, we stay the hell away from them. We do short-term things. Okay, we do AAA 1-year bonds or something like that. Or we buy variable rate demand obligations. Variable rate anything doesn't have any interest rate risk. Convertibles, I'm not saying to hold me listen, you're going to shoot me. If you see an answer, questions, and convertibles a choice, it's probably the answer more than not. Okay, so I did as much as I could in suitability. I could spend hours on it. Mostly it's examples. So couple of things. No risk and low risk are not the same thing. Low risk, I'm willing to take some risk. Blue chips. No risk means I want no risk. Principal protection, I'm looking at treasuries. And if they say 50-year-old, some of you watching this understand, I am 52. I am not dead. So don't put me in freaking treasuries. I don't want treasuries. I want stock. I'm not going to die, but I have another 30 years of investing. So don't think 40, 50 years old is near death. I know my 22-year-old students, I say 50, and they break my heart because they go, oh my God, I'll put them in treasuries. I'm not going to die anytime soon. Not going to die, but whatever. Okay, so I hope that helped. I ranted for 10 to 12 minutes. Since I did this, please share this. Please hit the notification. And please visit the links I put in my thing so I can pay my bills. I'm not going to push it. And if you want anything deeper, feel free to reach out to me and I can do some tutoring. I'm not selling it. All this stuff is free. Okay. The tutoring is not free, but this stuff, I'm helping people out. I'm trying to help people out. I feel bad. I will see you all tomorrow night. Hopefully a lot of you. Tomorrow night, people have been emailing me questions. I have a nice, probably 15 minutes of questions that I can answer. And we're going to go from there and see how much we go. If we go an hour, we go an hour. I have nobody scheduled. Because a girl who I used to meet after passed, which is awesome. She's done, and we're good. As I say to my students when they take their last test, in the nicest way possible, I hope to never see you again. Okay, y'all. Have a great night. Please like, subscribe, hit the little bell button, and comment. Please comment. Okay, good night.